G'day Internet, Max right here, and we're going to do a little bit of a fun change, a little bit of a fun switch up here for this channel. I've got Dirk here with me. Dirk's a good friend of the channel, been on that a number of times. I've known him for many, many years. But what we're doing is he's actually going to interview me on my channel. We've just finished recording a video where I interviewed him on his channel, and then hopefully it's a chance for you guys to get exposure in both different directions. So Dirk, take it away. What do you have for us today?
Awesome, Max. Well, thanks for having me here on the channel. And indeed, I'm going to be asking you some questions to share your knowledge and wisdom with us. So let's start out with crypto, obviously, first and foremost, because that's the most interesting thing at this point, I think. So let's hear your thoughts on the markets. What do you think is going to happen in 2024 for crypto? We've just had 11 ETFs approved by the SEC. The Bitcoin halving is happening in April. That's like 3 months away. So what is your theory? Are you bullish? Are you bearish? How do you see it playing out?
Yeah, it's very, very interesting times. And there's this big cloud over everything that's going on this cycle, right? As you well know, Bitcoin's had a very, very predictable cycle, and it can seem too easy sometimes. It has its 4-year cycle. We have a bear year, that was our 2022. Then it normally has in the lead up to the halving, you have well, I call it a sideways year, but usually, in Bitcoin, it can go up 100%. I still call that a sideways year because it's the world of Bitcoin, right? It's a very volatile world. If you say a sideways year is only like plus or minus 20%, well, that's no years ever. So a sideways year is like plus or minus 100% in the world of Bitcoin. We've just finished that in 2023. And then typically you have a very good 24 and a ludicrously good 2025. That's the 4-year cycle. And that halving event occurs in that 2024 year. So that's all all exactly as you would expect and as things would play out. However, there's this big thing that we've talked about is that Bitcoin only has ever known a big bull market, like global macro, a healthy environment. Meaning we had the 2008 financial crisis, we had a blip in COVID, and then they printed their way to fix all of that and papered over it. And so Bitcoin's only ever really known good times in the macro world. And so the question is, can Bitcoin survive when the macro environment is rough? And then are we going to have rough times in the macro environment? Those are the key questions that you have to know to understand, are we going to see something different this time? Because that's the big question, right? If we don't see anything different this time, we know what's going to happen. So 2024 is going to be absolutely outstanding. 2025 is going to be even better. And then towards the end of 2025, it's going to be a good time to get out of the market because 2026 is going to be a horrible down year. We'll probably come back, 50, 60, 70, 80%. So that's the state of play. So then the big question that everyone wants to know is it different this time? And it's a great question. I'll go through some of the to and fro of each. And I think COVID gave the big clue because there's no doubt that I think the economy is unhealthy. A big one is the inversion of the yield curve. That's for those people who are unaware of that. I'll just go through that really quickly. It's a measure of a relationship between bonds in the long end of the spectrum and the short end of the spectrum, meaning like 2-year bonds versus 10-year bonds. Sometimes it's a different metric, but it's something like that. And usually, the longer you lock up your money in a 10-year bond, you would expect high interest rates. And if you get to only lock up your money for 2 years, lending money to the US federal government, you would expect a lower interest rate. Every now and again, that inverts, and you get a higher interest rate short term and a lower interest rate long term. And that's the environment that we're in now. It's the environment that we've been in for several months now, almost coming up to a year. And basically, every single time, it's an incredible predictor of recession. All of the major last recessions had what's called the yield curve inversion. And what that means is that the market participants are expecting the Fed in the long term, there's going to be a crash, some kind of recession, some kind of bad thing, and the government's going to be forced to lower interest rates. See, when Jerome Powell says, I'm going to higher interest rate, lower interest rates, he controls 1-month treasuries, 2-month treasuries, 6-month treasuries. He controls the short end of the curve. But the market controls the long end of the curve. The market says, I can see into the future. That's what markets do. They can see into the future. They can see what's going to happen. And I know what you're going to do. If there's a recession, you're going to lower interest. So what the long end of the curve is saying, the market is saying, we are convinced there is a recession, some kind of crash coming, which is going to force the hand of the Fed to lower interest rates. And hence you get the inversion of the yield curve. It has been an extremely good predictor of a recession. And that's just one. I could go on with lots and lots and lots of metrics about how unhealthy the economy is, just like you can, Dirk. And it bodes for there's almost certainly a recession coming up very, very soon. Possibly this year. I would say probably this year, possibly next year. And then you throw into the fact that this is like one of the most tumultuous years ever in terms of elections. We have a US election, yes. We have a presidential election, yes. But there are over 40 countries around the world and 42% of the world's GDP that are having an election this year. And this sets up tremendous amount of flux, tremendous amount of change, all at a time when the yield curve and many other predictors are predicting a massive recession. And we live in a world that's where contagion happens. We know when the US sneezes, the rest of the world catches a cold. So we have that kind of environment where it's basically one big supermarket, and we know for a fact now that all of the central banks talk to each other, they plan together, they chat together, and it's a very much a world, almost I would say an unfederated World Bank at this point because of all the collusion. I say the word collusion. Collusion could be beneficial to us if they were on our side. I don't think they are, but the coordination could be a nicer way to say it. You might be in the collusion camp, you might be in the coordination camp. I'm in the collusion camp, but either way, the facts are the facts. The central banks talk to each other and work together. Maybe they're working for us, maybe they're not. You can decide. Okay, so that's kind of the landscape that we have here. So again, coming back to that central question, the central thesis, is it different this time? And I think the best way to think about it is let's just play it out and think, well, let's go through the different scenarios and then attach percentages to each of those likelihoods and see, well, what's going to happen. So option number one is we go into a recession. It's been, we had a blip in after COVID, but really we haven't had a proper recession since 2008. Typically recessions happen every 7 to 8 years. We've been going 15 years, no recession. So we are well and truly due one. The yield curve is telling us we should have one. There's lots of reasons telling us we should have one. I think it's fairly likely that we have a convulsion in the market as a bare minimum. We have a convulsion. Now, think of COVID. It was one of the biggest convulsions you could possibly imagine. Let's send the world home for 6 to 12 months and not let anyone work. Oh, and at the same time, while we're not producing goods and services, let's print a shit ton of money and hand it out to everybody. And then all act surprised when there's inflation at the end because you got a shit ton of money chasing very few goods because no one was allowed to produce. Of course, inflation was going to be the answer to that particular conundrum. So, okay, but COVID was nonetheless, it's about as big a convulsion as you can send into an economy. And it was a very short-lived recession, very short-lived, blink of an eye, barely measuring. Why? Because of they just printed trillions and trillions and trillions of dollars. They papered over it. The consequence was inflation. Okay, let's pause there and let's go back and understand that a little bit. Let's understand the history because we're used to recessions every 7, 8, 9, 10 years. We've been going 15 years. Maybe the Fed is now that good that recessions are a thing of the past, as Janet Yellen says. They've got it figured out so well, they're going to keep us in prosperous times forever and ever. Okay, that's one theory. I don't think it holds much water because what we've seen is the way they fix things is to print money. Printing money has another side effect, has the side effect of inflation. And that is a far more stealthy way to create poverty. What is a recession? It's people and by the way, this is the Fed's stated goal. Inflation is too big. They don't use these words, but if you can decipher what they're saying, it's clearly what they're saying. All we're going to do, guys, is we're going to make people so poor, they can't afford stuff anymore. And that solves the problem of inflation. If you can't afford to buy shit, then sellers have to drop their prices to liquidate it. And now that you're all poor, I've solved inflation. Pat me on the back. I'm now an economic genius. Right? It's worth pausing here for a second again, just to educate people. There's two ways to solve the problem, right? You can either make people so poor, i.e. that they can't afford to buy things, or you can eliminate the huge bureaucracy, you can eliminate all the headaches, and you can go back to a free market, in which case the economy and the capitalists get very, very efficient, and they start producing an enormous amount of goods. And so you either destroy the money or, I'm getting ahead of myself, but you either make people poor. The way they do that is you raise interest rates, people can't pay back loans. When they go to buy loans again or they go to borrow money again, they can't. They default on their loans. That debt is liquidated and the money supply shrinks. I went through that very, very quickly, but I hope you understand. All it means is the money supply shrinks. The alternative is goods and services go up. There's only two ways to solve the problem of inflation. They have chosen to set the world on fire economically, make everyone poor, and solve inflation that way. Truly ridiculous. It's like there's termites in my house. What are we going to do? Well, I'm going to burn down the house. Pat myself on the back, telling you that I solved the termite problem. So, okay, that's what they've been doing so far. Are they completely stupid and don't understand. I can't believe that anyone can be that stupid. The people at that level can be that stupid. So that's why I say, if they were merely stupid, they'd occasionally make mistakes in our favor. When they're consistent, pretty much shows that they're nefarious and trying to keep us poor. So that's my mentality there. So, okay, we know that they had a history of when there's problems. And by the way, again, you need to understand the history. They couldn't always print money. This is a relatively new phenomenon. To be able to print money this quickly and this easily, just with a snap, it's actually relatively new. For many years of the United States history, like from the invention of the Federal Reserve, 1913, through till just after World War I, we were, it was gold-backed currency. Then we went to the Bretton Woods system, which was a gold-linked system. And then it was finally in the early 70s when Nixon took us off the gold standard. And then they were able to print money basically with reckless abandon. However, there was still the psyche. You were coming from a generation of people who grew up with a gold-backed currency. To change the laws and then instantly start printing money like crazy, that was too big a shift. So these are generational thinkers. They have long-term plans. If they make a small incremental plan that improves their level of controls for their children, that's a win for them, and their children do the next, and that's how they keep goals. They don't go and try and shoot for the stars on day one. That's not how they roll. So they couldn't go to the crazy money printing just because they had it on the books. They had to wait for another generation to come through where all of a sudden people don't even remember gold-backed current, right? And so 2008 crisis comes along. They do, there's a few things, bailouts, and they bail out some car companies, and they bail out this company, and they bail out that company. Okay, there's a bailout. That's an interesting thing. 2008 comes along, and it still took 9 months from when, I think it was when Lehman went down to when actually the stimulus package, they debated about it. Congress had to pass it. Things had to happen. Stimulus package took 9 months, right? Caused global financial crisis. COVID comes along. By now, the generation who remembers gold-backed currency, they're all but gone. The people took 2008 on the chin. They let us print money. They let us do stimulus package. Everything's fine. It's now part of the zeitgeist. Within days, just the money printer turns on, helicopter money, as Ben Bernanke named it, and all of a sudden there's stimulus checks going out. There's PPP programs. There's all kinds of just money, and it papers over the problem. We never really got to see what was obviously recession-causing behavior of making everyone stay at home through COVID. So we know what their game plan is going to be. However, now we see that there's a side effect to that behavior, which is inflation. Okay, that's the catch up of the history. So now the question becomes, do they print again and start when the next shock happens, which I think is probably going to happen this year, if not next. When the shock happens, do they print again? Or have they learned their lesson and now goes like, oh, the inflation is going to happen. We're going to have to let it crash. I believe that it's near impossible for them to let it crash. And history teaches us this. I mean, there's been different forms of inflation from clipping of coins in ancient Roman times to now. They debasing the money is just a very, very old practice. And what we see is when it is available to politicians, they take it every single time. There's never been an exception in history where they had the courage to say, no, we're going to let the free market do its thing and crash. When we have hard money or a gold-backed currency or there's some legislation prohibiting them from that, we see what happens is that, yes, there's a short term, there's a recession, a depression, something bad happen. As long as you just let that excess get washed out of the market, let the free market do its thing, within a handful of years, it comes back. With the Great Depression, there was an enormous amount of stimulus, all kinds of things came in. That was a very elongated recovery because of so much government intervention with the Great New Deal. So there's a lot of history there for you, Dirk, and I know you know most of this stuff. So all of it lends to trying to understand, are they going to just let it all crash? And what does it mean to let it all crash? What that means is to just let the economy just crash. We're talking about bank freezing up. We're talking about banks not being able to loan to each other. We're talking about like a mass extinction of huge numbers of banks and trillions of dollars lost, vaporized. Because when those banks fail, that means people's savings are lost. That means people just got poor overnight. That means people can't make their repayments. That means people are not going to pay back the banks that survived. So there's a couple ways that can play it out. One, they could let it all crash and it would be a massive consolidation of financial interests. What they'll do is there'll be a handful of important banks that get saved with bailouts, and they'll let all the other banks die. And they maybe guarantees a small amount of funds for everybody, like what's FDIC insured or something. And they'll print it. But what they can't do is actually let the free market work. That level of pain is just too significant, in my opinion. They wouldn't allow it. Their heads would be on pikes in the streets. They need a more subtle way. Bad things are coming, but they need a more subtle way to do it. And the subtle way that they do it is typically inflation. They will just print And then the slow pain and misery and burn of inflation comes along. And then those guys who caused it get to say, it was those easy, evil, greedy capitalists who are raising prices on you at a time when you're hurting. God, those guys are bad. Don't worry. Me, the wise, wonderful politician, I'll legislate laws against those bad, evil capitalists, and we will take from them their factories and make sure we produce the products for you for free. And they'll turn into a more centrally planned. That's the way they do it all the time, just throughout history. No one's sitting there at the helm, president, congressman sitting there, Caesars, whatever, sit there and go, oh, the economy's going down and I can just print money or I can just clip coins and I'm just going to let it happen. It just never happens that way. So I think there's always going to be some printing. So now, if you subscribe to that thought, now you got to go another level and you say, so, okay, there's going to be printing. What does that look like? How quickly does it happen? Do they let us suffer for a couple of years and we just think like the value of things go down, the value of real estate goes down, the value of Bitcoin goes down, the value of stocks go down, everything just crashes. And then after a couple of years of misery, then they print? Could be the case. But, at some point, their heads will be on pikes if they do that. So they're going to print. Now, it could be they could print immediately. Or they might have to show some hesitation because they learned their lesson from inflation and wait 6 months, 12 months, 18 months, 2 years. But eventually, I have a very strong conviction that they print and they devalue everything, and then everything goes up. Bitcoin goes up, real estate goes up, stock markets go up, and everything goes up. So I don't know the timing of it, but I have very strong opinions on the actual out. So could there be a sustained broad bear market for a couple of years before they print? Possibly. So okay, so now I think, okay, I know where I know where the puck's going to end up, to take a Wayne Gretzky paraphrase. I've just got to get to there. At some point, they print the money to oblivion. They'll have a plan for it. Don't worry. They'll bring in a CBDC. There'll be a world currency that, when US dollar fails, there'll be a BRICS nation currency, or there'll be a currency at the World Bank that they'll bring out. They'll have a plan for how to save us their way, right? But at some point, the currency is going to crash. And I know where the puck's going to be, so I've got to get there. Question is, how do I survive on my way there? And that brings me to, how do I construct a portfolio to live through all of those possible scenarios that gets me to where the puck's going to be? So let's figure out, what do I want to do when the puck's going to be there? Well, where I want to be, I think at this point, when people learn, everyone's going to have to learn the painful way of inflation, of what happens when they print money. And therefore, everyone's going to turn towards hard money and hard assets. You can choose Tesla stock, you can choose gold, you can choose Bitcoin, you can choose whatever. Bitcoin's going to outperform all of them. I'm very, very confident in that long term. So that to me becomes the very, very obvious choice of what I want to have the most of at the end goal. But what if they don't start printing for 2 years and I've got my house is underwater, my investments are underwater, my stock portfolio got crushed, I lost my job, and I've got to survive for a couple of years. So how do I guarantee that I survive for a couple of years so that I don't have to liquidate my portfolio, so I get to keep it when I get to where the puck is going to be? And that comes into the defensive position. That comes into...
That's the biggest thing, where most people don't have that runway to be able to hold on to their assets long enough, and they're going to become forced sellers at the worst possible time. And then when it eventually goes back up, they have nothing to buy back.
Exactly.
So indeed, what is your strategy? And what would you recommend to people? How do you play this in the best way possible?
So I think the secret for me is, and what helps me is just sleep at night, is that I have a defensive position of cash. And I put in US treasuries and I earn on the short end of the spectrum. So I earn 5% per month, 5% per year with that, right? So it's invested at 5%, which is below inflation, and I'm losing money on that. And I know that. But what it does is it helps me sleep at night, and I have a runway. I know that I can use that money to live for me, it's a lot. For me, I could live for 10, 20 years on that cash. All right, I could live for a long, long, long time on that cash. It's quite a significant amount of cash. The other side of my portfolio is knowing where the puck is going to be, because I don't know if this is all going to happen tomorrow. It's going to be elongated. So I have the other part of my portfolio, which is invested for growth. Now, me and my analysis, I think the central banks of the world have just become, they've overwhelmed the market. And now it's the everything trade. I think you mentioned in the last video, it was, what do you call it? It's the inverse DXY trade. When the DXY goes down, which is a metric to measure the US dollar, when the DXY goes down, all assets go up. Real estate, stocks, Bitcoin, crypto, art, wine, all of it, everything goes up, because the central banks have become such a big animal. It's overwhelmed the market. Everything goes up or everything goes down. Everything's correlated, right? So I need to be in something over here. Like I said, it can be Tesla stock, it can be fine art, it can be whatever. What do I think is the best performing? Well, historically, it's really, really easy. Bitcoin is smashed all of those asset classes. Absolutely smashed it. And then I look at, well, what's coming up? Well, Bitcoin is getting more scarce, not less scarce. And with everything else, as things become more valuable, as real estate becomes more valuable, that's a signal to developers to go and build more real estate. And so they can always create more apartments. They can always build taller buildings. They can always chop down another farmland or forest and build another city. So you can always expand. If the price of gold skyrockets to $20,000 an ounce of gold, miners are going to go and find more gold. I promise you. That all of a sudden it's now it warrants going and diving to the bottom of the sea and drilling at the bottom of the sea that's looking for gold. We will find more gold. As price goes up, we will find more everything. Bitcoin is the only thing that is perfectly inelastic to supply with regards to to demand with regards to its supply. No matter how much people want it, there's no more of it. And the amount of Bitcoin being minted is just getting smashed, just shrunk and shrunk and shrunk. And we're coming up to a halving. It's going to go down again, get chopped in half by 50% again. And so I think that you've got the ETF approval, you've got the fact that it's perfectly engineered money. I could do dissertations on Bitcoin, but given the fact that we're speaking to a very educated audience on Bitcoin from your channel and from my channel, I don't think I need to go into that. Bitcoin is the best asset out there. It's the best asset class, for sure, in my opinion.
Am I still talking to Max or am I talking to Michael Saylor here?
So, I wish, right? He's a very gifted orator, very, very smart guy. That's a very kind compliment you just gave me. So if we understand all that, I construct my portfolio in the simplest and most boring of ways. It's whatever I can afford. I need a certain amount of cash to sleep at night. Whatever I don't need for that to give me a nice long runway, right? Whatever amount of cash I don't need for that runway, I stick in Bitcoin. That's my portfolio.
Right.
Speaking to a traditional financial analyst, they would blow their minds over that. But everything's correlated, so what's the point of being in an underperforming correlated asset?
Okay, so if everything is unsustainable, fiat currency is eventually going to end up at zero, as history has shown us. It just gets worth less and less and less. Inflation goes up. Okay, let's say Bitcoin is the answer to that because it's the best money that's ever there, 21 million supply, et cetera, et cetera. Would the people in power really allow that to happen? Do they just let Bitcoin become insanely valuable and everyone who's in it, the regular people, just get rich right now? Or will they suppress it? What do you think about that?
So yeah, first of all, and I knew this in 2012 when I first got involved in Bitcoin, I knew with 100% they will throw everything they can at Bitcoin and Bitcoiners. They will do whatever they can to suppress it because I've seen them do it in other markets. Traditionally, when governments are spending like drunken sailors and they're debasing the currency, gold is the canary in the gold mine. The value of gold skyrockets. People see inflation coming. They see reckless governments doing reckless government things and they jump into gold. And the price of gold is usually, I view it as what it has been, is that it's the insurance premium. So the higher the value of gold, like if I'm standing in front of a house that's on fire trying to get house insurance, it's going to be very expensive insurance, right? The cost of insurance is a lot. So if governments are spending and they're running deficits and they're having to print money out this, the value of gold is going up. The insurance premium is going up because we can see that we're going to need this insurance product very, very soon. So gold is the canary in the coal mine that tells you that government spending is out of control and something is broken. They have successfully executed that canary. In order to understand how they executed that canary, because gold price hasn't gone above 2,000 in like over a decade, how do they execute that canary? They did it with futures ETFs. And so little background for those of you who don't know, we've been trying to get a Bitcoin spot ETF for many, many years. And the SEC has been saying, no, 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 no. And eventually they outright said, hey guys, I'll approve a futures ETF. I will not approve a spot ETF. They did this several years ago. And they were going to try and do the exact same thing with Bitcoin as they did with gold. Challenge them in the courts and we got a spot ETF and we beat them. But let's go back so you fully understand what they did and how they did it in the world of gold. Gold is expensive to transport. It is a pain in the ass to secure. You got to worry about people stealing it. You got to pay someone with a gun to stand in front of it, make sure no one steals it. And actually holding gold is a pain in the ass. So what they did was they created gold ETFs, which is you can buy gold, which has exposure to gold, but you don't have to have the headaches of storage. You don't have to have the headaches of security, the headaches of transport. You can say sell, put your money in your account the next day, right? And it was basically done on futures, right? That's how it's achieved. So what happened was because gold is such a pain in the ass to hold and do anything and costly to people stopped buying it and they just started buying the futures. They started buying paper of gold. They started buying a promise of a note that was it was a reflection of the price of gold. And for the first decade, what happened? The vast majority of the volume was in the physical gold market, and people were just that you could speculate on futures over here. But as time grew on, the volume is all in the futures now, and the volume in the real gold market is less. So what happens is the price is no longer set at gold, and now you're betting on pieces of paper whether that'll go up or down. Now the price of gold is set in the futures market, and it's the tail wags the dog, is what I'm trying to tell you, right? Because the price is set here. So now let's just say the government's going to spend a lot of money. People are thinking inflation's coming. I need to take a defensive position in gold to hedge against inflation. Do you go and buy the physical gold anymore? No, you're in the paper market and you go and buy gold. So what do? They sell you a piece of paper saying, I'm going to give you gold. And you buy another one. I'll sell you another piece of paper. And they will just keep selling you pieces of paper forever. And the pieces of paper absorb all of the demand and produce no scarcity in the physical market. And that's what they tried to do with the Bitcoin futures ETFs. But something I figured out in 2012, I think they're going to try and do the exact same thing. I believe they're going to fail. Here's why. Bitcoin costs nothing to store. Bitcoin costs nothing to transport, and Bitcoin is very, very easy to secure, completely decentralized with individuals. You do not have to hire a guard to stand out the front of it. And it can work as cash. In order for gold to work as cash, here's another thing. You can take a defensive position as an individual, but you can't replace the currency of the world with gold. And here's why. The free market could solve this problem like that. They've tried it very, very easily. What happens was everyone sends their gold into a vault, and there's a company that stores it all, and it says, Max has got 10 ounces of gold, Dirk's got 3 ounces of gold. And it's like, hey, Dirk, I want to buy your shirt. And you go, sure, yeah, it's 0.1 ounces of gold. And we do it like PayPal. It's like on the app. And the company deducts the amount of gold from my account, adds it to Dirk's account, and the gold never moved anywhere. It costs nothing. And so it was a very, very efficient currency system. This has been tried many, many times. Every single time, what happens is the government comes and shuts it down. Men with guns come, confiscate all the gold, the police, confiscate all the gold, accuse the owners of funding terrorism, helping people avoid tax, running human trafficking. The founders go to jail. Everyone who was an innocent person who put gold in there loses all their gold, and you learn the lesson, slap on the wrist, do not compete with our currency system. That's how they defeated gold as money. They killed that canary in the gold mine. One, by the futures market, and two, by never allowing people to use it as currency, because you can't do internet transactions with a lump of gold, right? So you need a centralized, gold needs to be stored somewhere. Now it becomes centralized. Now men with guns can just come and kick over the sandcastle whenever they want. That's how they killed that canary in the gold mine. What I figured out in 2012 and the reason I got into Bitcoin was just to tell the silly fool that this magic internet money would never ever work, and here's why it'll never ever work. And so I know, and I go through all it, and I'm like, my God, this thing, it is decentralized. They can't kick over the sandcastle. They can't do this. They can't do that. At some point in many, many years from now, I knew they would do it. They're going to offer like futures ETFs. And it's like, but it's expensive to store gold. It costs a lot of money to secure it. You can have a piece of paper hidden on an envelope somewhere in your house, buried somewhere, whatever, and you can store it for free. You don't have to tell anyone about it. They can come with metal detectors. They can't find it. You can store it for free. It's not going to work. And they can't, there's something else they do in the futures market is they lease it out several times. And how much gold is there? Is there gold at Fort Knox? Who knows? Did they sell it all? Who knows? Maybe they sold it all to suppress the price and they're lying to you. You don't know. With Bitcoin, you can see on chain, do they have them? I can tell you exactly how many Bitcoin Michael Saylor has. I can tell you exactly how many Bitcoin Coinbase has. It's all on chain. You can see it. So you have provable reserves. They can never sell imaginary stuff or sell it 10 times. You sell it and you ask for delivery and you get it and it's free for you to receive. It's free to transport and nothing for you to store. And so they can't kill it the way they killed gold. Which all I need to know in terms of is it a bet if I'm a liberty-minded person who's trying to defend myself against aggressive governments who want to keep me poor by constantly confiscating my wealth through inflation? What's a better tool to defend myself? And Bitcoin is a better tool to defend myself, for sure, for that reason, because of all those reasons, they can't do what they did. So that's cool. As a liberty-minded person, I've now picked up a better weapon with which to, cool, I'm all in. Is it the perfect weapon? Now, this becomes a question. This is a war. Like, make no mistake, this is a war. Do they have other tricks up their sleeve? Are they just going to sit there and take it on the chin? Absolutely not. They're going to do other things. They're going to try and make mining illegal. They tried to do that in China. Wow, that didn't work. That was a spectacular backfire. Didn't work. Okay, cool. Wow, I'm realizing my weapon's even better than I thought. It's a decentralized mining thing. They can't shut that down. As long as there's one computer somewhere in the world running Bitcoin mining, Bitcoin works. That's incredible. Okay, so what else are they going to do? They can try and poison it. They can use their power in the media They could to try and get out narratives. This is for anyone using Bitcoin as a drug dealer or using it for nefarious reasons or evading taxes, and they can demonize people. Unfortunately, they spent all their ammunition on media, and no thinking person trusts anything they say anymore. And they're running out of weapons. And here's us. It's just like, like we're the superhero carrying Bitcoin, and it's just like defending all of these peasant weapons that they had, which thwarted gold, and it's just bouncing off. They're just standing there, like you're like bulletproof. I'm gonna sound like Andrew Tate again. Bitcoin's just there, unfazed, bullets bouncing off, right? And so Bitcoin has proved itself so far. Now, this is a war. Bitcoin's winning the battles, which is unbelievably hopeful. But I understand it's a war. They're going to keep thinking of reasons, keep coming up with things. I can't think of anything. Doesn't mean they can't think of anything about how they defeat it. But hopefully, if that's the case, hopefully we as liberty-minded people will invent something even better and stronger that solves those problems if they ever end up beating Bitcoin. But personally, I can't see how they do it at the moment.
Yeah, that's just super interesting. I thought that would be cool for to share with the viewers also. I agree. So for the person who maybe doesn't have that much financial resources, let's take the average person who's just working a job and they have some savings and things like that, but they obviously don't have like 10 or 20 years worth of cash and other money, right? Maybe they have a year's worth of cash. So how do you, because you have to prepare still for potential drawdowns and maybe a period of 2-3 years, who knows, where the price where you buy in drops significantly. So what would you say for that? And in terms of strategies for potentially making more money this year, what are things to look at? Would you look at maybe real estate? How do you see the market there? Are there opportunities with stocks? What do you think is the best way for the average person here who's watching this right now to be like, okay, well, this is how I'm going to really move the needle in 2024. What are the kind of actions that I should take besides obviously stacking as much Bitcoin as possible?
Gotcha. Well, now I take off my Michael Saylor hat and I put on my Andrew Tate hat and yell at you for being a lazy son of a bitch and get to work, right? Go to work, improve your skills. But it's a great question, right? Because that is where the vast majority of people are, and that's totally understandable. So there's an interesting thing going on there. Number one, if I had like very, very little, I mean, I would just put all my chips on the table and just go for Bitcoin. Like, I think, like, I'll exaggerate it, but sleep in a dumpster if you have to. Like, you can live very, very inexpensively. Yeah, if you're like a young person with very, very little, yeah, you can live in a dorm, like, like get 4 or 5 guys in a house, like a 1-bedroom house, and survive. But it's giving you yourself out with the investment money, right? I would go to that extreme if I was at that level, because I'm an all or nothing kind of guy. But not everyone has that. I understand that. But if you have a very small amount of money, you're not going to be able to invest your way out of it. You might, and this is where people get suckered into the whole crypto pump bullshit and get into the altcoins and the shit coins. It's like the amount of money I have isn't going to get me rich if Bitcoin goes up 20x. So I need to go and find something that I think is going to go up 100x or 200x or 500x. Then they go and invest in shit coins and they get wiped out and they got nothing again. So don't do that. Don't go that path. If you can afford, if you think you can, I wouldn't go into debt. Well, I mean, you make a really good argument for that too. See, I can make a really, really good argument for go and borrow money, get a couple of personal loans, max out a couple of credit cards. You get $100,000, right? You leave the country, no intention to pay it off at all, ever. You go and put 50 grand into Bitcoin. You go and live in, Thailand or India or something for 3-4 years. A, it's an amazing experience. B, you can still work there and build your skills, and now all of a sudden you're living for pennies on the dollar while you're building your skills and maybe figuring out how to make money on the internet, something like that. So I mean, I can make an argument for that. I'm not saying that's a good thing. I don't think that makes the world a better place. So I'm a little bit, I'm unbelievably like a unbridled capitalist, but I'm a little bit kumbaya as well. So I'm like, it should be good for you, but it should also be good for the world. So I'm not actually advocating for that, but I can certainly make an argument for it. But what you would have to do, part of the equation for sure, is you have to build up your skills. It's your skills are going to save you. And it's very easy to get into the world of doom and gloom. And there's a phrase out there called doom porn, where you watch it, you're subscriber to all the channels. It says there's going to be massive depression this year, and everything's crashing, and everything's going to get fucked, and you're going to lose your job, and all that kind of shit. And it's a very seductive world because it gives you permission to give up, right? And so a lot of people get suckered into that. And I would also caution against that. What I would say is, just to remind people, let's just say like a really, really bad scenario, like the Great Depression. Like unemployment was 30%, right? And it was hard, really, really hard times for a shit ton of people. But in order to not be suffering like that, you've only got to be in the top 70%. Then all of a sudden it seems very achievable, right? If I can just not be in the bottom 30%, I'm in this, I can keep my job, keep myself going. Do you know how easy everyone's sitting at home playing video games? Do you know how? So I told you I'd sound like Andrew Tate. Do, 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 do you appreciate how easy it is to not be in the 30%? It's not that hard, guys. It doesn't take much skills to get there to where you're invaluable to somebody somewhere, where somebody with money can pay you to do things. And in a time where, in the Great Depression times, it's the easiest time to make money without money because people with skills are so valuable because people don't know what the hell they're doing. And I've talked about this. You know this story. Like, let me think. So Hilton, for example, the Hilton hotel dynasty, right? He bought his very first hotel. I think it was 31. It was in the middle of the Great Depression, right? And you know what he bought it for? The building, I don't know the exact numbers, but the point was the building was making $2 million per year, and he bought it for $2 million for $2 million. Imagine buying something and paying it off at like a hotel and paying it off in a year. So he used that same technique. He bought 4 hotels, right? Throughout the Great Depression, and all of them were he bought them, the price he paid for them was like a 1x. Right now, if you want to buy something, it's like if you want to buy a hotel, it's a 20x. But when everyone gets smashed, right? So the point is this. Now, it's like, okay, where the hell am I borrowing $1 million from to buy a hotel? I understand your point. But you can actually structure those deals without using any money, right? You don't have any money. You can structure those deals, no money down. Or if you have the skills, you can go and attract investors. And I'm telling you, in those times, and I've never seen them firsthand, we're talking about the Great Depressions before my time, but the worse things get, the more people just give up and go into, I'm just going to sit here and be a victim. And it's not that hard to be an exceptional person in that environment. I've read a lot of stories to truly try and understand what the social dynamics were in the Great Depression. I mean, a lot of us read the economics books, and I try and understand what's going on in the mindset of people. And if people can come with just a handful of skills and a good attitude because they saw it coming, they prepared their mind and soul for it, they started working for it, they understood they were going to go through some very tough times, but they made a decision they were going to come out the other side a winner. I'm telling you now, every single person with, I won't say it's not a lot of work, but with very achievable amounts of work, can really create exceptional lifestyles for themselves during those tough times. So to your original question, what is it that you should do? You got to build your skill set. You got to build your skill set up in one way or another. Become a great trader, become a great, there's a million different things. Literally, you can do anything. It doesn't matter. Whatever your skills are, that's great. But you got to get your skills because all skills are needed. You can be a graphic artist. You can be a story writer. You can be whatever. Skills are needed. If you're great at it, you'll do it. But you just got to work hard and become great at something.
Yeah, I think so. And really to kind of wrap things up, is there anything else you would want to leave people with for 2024? I mean, personally, I think this year is going to be a great year to create wealth and whatever happens in the market, because you can also make money from the downside. But any tips or any suggestions in terms of maybe this is one cool question. In terms of cashing out, right? What do you look for? When do you think the cycle is going to peak? What are some warning signs where you think maybe, are you going to hedge? Are you going to sell? Are you going to do anything? And what are your tips with that?
So for me personally, I'm very, very confident that I will never sell any Bitcoin ever again. And the reason is we are now at a point where DeFi has come along. I talk a lot about Thorchain on my channel. And there's ways to now borrow against your Bitcoin and pull cash out in a very, very safe way. Like there used to be a huge liquidation problem, which was a problem. And there used to be a lot of problems. There are now very, very safe ways to borrow against your Bitcoin. And so for pretty much anyone who has Bitcoin, I'm suggesting that you should never, ever sell your Bitcoin again. And I've got a bunch of videos on my channel about that if you want to hunt for that. But I don't think I'll ever sell Bitcoin again. Then the question is, and the cool thing about that, let's just say I've got like $1 million in Bitcoin and I want to borrow. I suggest using low leverage, but let's say I just want to pull out. Well, it depends on the terms. But anyway, let's just say I pull out 50 grand of cash and I'm borrowing 50 grand against my $1 million of Bitcoin. And let's say the big price of Bitcoin goes up to like doubles. Well, I can just so remember, if I sold it, that's it. I missed out on that. But if the price goes up, I can just say, hey, my collateral's gone up. Now give me 100 grand, and I can go and borrow more, right? And so now that was at a 5% leverage. Again, I don't have time to go into it in this video, but there are ways now in the DeFi world where you can actually borrow like 30% LVR of your Bitcoin. So if you have $1 million of Bitcoin, you could borrow $300,000 of Bitcoin, sometimes $400,000 of Bitcoin, no liquidation. It becomes very, very safe at that point to do that. And so now, because if you think, I did an analysis, right? It's like, if I have to sell, because all right, sorry, let me say this a specific way. If I try and sell, right, then I get all of it, but the tax man takes a huge chunk depending on where I live in the world. And then to get the exact top, like in 2020, it went to $20,000, but it was like only above $15,000 for like 7 days.
Yeah.
You're going to be really, really good to pick the top, right? But when you're borrowing against it, you borrow against it. The price goes up, so you borrow against it more, and the price goes up, you borrow against it more, and then the price crashes. And it's like, well, you know what? I never sold it, and I ended up with more cash. I had to be a genius to get the exact week where I would have been above what I borrowed in it, right? So that's why I think selling becomes absolutely futile. A, you pay the tax man. B, you no chance of going up anymore. And if you can find a no liquidation loan for your Bitcoin, well, now you're in a situation where you just leverage against it, and life's very, very good. So that was on lending, and because you asked about exit strategies. So I wouldn't exit crypto anymore. Exit.
But you're specifically talking about Bitcoin, though. I would guess you would have a different view on altcoins or not?
Yeah, you can. Again, in the world of DeFi, there are other altcoins that you can do this kinds of thing as well. Certainly the major ones, but it's all coming very, very quickly.
Yeah.
But yes, okay. In maximizing your portfolio, you might want to shuffle things around. Like definitely you want to get out of like so if you can get anywhere near the top of altcoin season, then yeah, I could totally see myself selling that. And always sweeping into Bitcoin. That's just what I would do. I would just always sweep into Bitcoin. But in terms of 2024 mindset, I would say work on your skills hard and to the best of your ability, stack sats. Like just be hoarding Bitcoin as much as you can. And if you want to degen into some altcoins, I totally understand it. It's probably going to be a very, very good couple of years for altcoins as well. Can totally see why one would do that. So that's my advice on there. As we wind up, I should point out, guys, you should definitely go ahead and head over to Dirk's channel. Okay, so one of the links in the description is going to be a link to a video that we did at Dirk's channel, where Dirk is a very, very smart guy. He's been very humble in interviewing me this whole time. But on his channel, I go ahead and interview him, and you get his answers to all of these questions. So it's a very, very highly recommended. You jump over to his channel, subscribe to this one before you go, subscribe there when you get there. And then also, if you want to get a free presentation from me, just in the link below, you'll find a way to go ahead and join some live webinar that I've got coming up, and you'll learn a lot from that. So that'll be really good. Any final thoughts, Dirk?
Yeah, I think this was super interesting. I guess we'll see in the comments. Like, leave a comment down below, guys. Any points that Max or I made during this video. I know I didn't speak too much, and Max shared everything, but I thought it was super interesting, actually. And let us know in the comments down below. Check out Max's webinar if you haven't done that yet. I find it very interesting how he views the world in terms of where things are heading and how things are going. And I appreciate the conversation. And let's do it again, maybe 6 months from now. This time, not so long.
Awesome. Agreed. Take care, guys. Bye.
Awesome.